Hello guys, welcome to the Trading Parrot. I woke up this morning, grabbed my phone, opened TradingView, and I couldn't believe how accurate the breakout target that we've been discussing in the past 2 days was. In today's video, we're not just gonna brag about how we nailed the target for the breakout, but I'm also going to cover the most important thing right now, which is we have flipped into an uptrend in the daily. But in order to sustain this move, we should be expecting a higher low next right after the breakout. And I have very strict rules to confirm that the breakout is healthy. So we will be looking into, is the breakout in a healthy state? Does it pass the TTP rules? And for the next pullback, how low it should go to confirm that we are still on track for further upside. There are a few levels of liquidity that are actually worrying me. Either of those two levels of liquidity might spoil the party. So don't get me wrong, I'm not forecasting that the breakout is going to. But what are the levels that could make just 66 the highest we can get? Guys, if this is the type of content that you like, make sure that you're subscribed to the channel, enable the notification bell so you get notified every time I publish time-sensitive information. And if you want to really support the channel, do not go anywhere without leaving a comment down below. Have a look in the description at 3 links. Number 1, the performance of our copy trading bots, and our 2 sponsors of the channel, being X with 6,000 in rewards, specially tailored exchange for those that are struggling to get access to perpetuals anywhere in the world, KYC not needed. And if you really want to go for the best exchange at the moment, that will be OKX, and I have a prize pool of 60,000. All the 3 links are in the description. Another reminder that we have made the picnic tier 100% free lifetime. All you have to do is go to thetradingparrot.com and join the picnic tier. Then scroll to the bottom of the page and click what's included full detail. Then expand these panels and have a look at what's included in picnic. Of course, if you are interested in supporting the channel, have a look at what's additional in the higher tiers as well. The monthly is starting to look really bullish. Whenever you have a retracement, like for example this engulfing red candle, the next thing that you're looking for as an investor and as a trader is for the next swing high. Personally, what I care the most is not to overcome the effect of this red candle. I'm not expecting May to go beyond this to become bullish. All I need for the month of May to be bullish enough for a continuation to the upside is that we overcome over 50% of the damage made during the month of April. And this is a candle of $10,400. So if we can make a candle of 5,000 in cash in terms of the body of May, so in other words, if we can close at 66,000, that will be extremely bullish. And don't get me wrong, we might close below it and it might still be bullish. I'm just saying that it will be a dream come true right now for the bulls to close 66,000 the month of May, and that will make really nervous the shorts. Many of them are gonna stop closing them in a loss or break even, just because they're gonna start expecting the price to go beyond. Many investors like me were expecting to go and retest the 51 and the 48, and we might be completely proven wrong. The month of May is already showing some green. It's at 9% against the last previous 3 years, very similar to this 9% of 2020. The greed and fear index is going back into the 70s. This structure here of the greed and fear index looks extremely bullish. If you have a good eye for patterns, you may notice that this shape looks like an inverse head and shoulders. I mentioned this a few days ago, so if you missed it, I said that when we were at around 56 here doing a higher low, I say that this is the shoulder left, this is the head, and we are starting to form some sort of right shoulder. Today that right shoulder is completed. If this breaks out, we should be aiming again for another push to the high levels of greed, which are located at around the 90. So ladies and gentlemen, that particular scenario is right now on the table. All we need to do is tomorrow to have a fear and greed index higher than 70. So go on, visit the website Fear and Greed Index, and if you see it higher than 70 tomorrow, literally it will be doing a bullish breakout from the pattern. And here we are. This was one of the most posted patterns even before the breakout all across crypto Twitter. I mentioned that 2 out of 3 accounts in crypto were talking about this pattern during the 13th of May. Right after that, we have this red candle coming back inside the pattern, making it a little bit scary for investors. And then we have this massive green candle. The volume was not completed for the day and we were below the moving average. What I said is that for the breakout to confirm to be a valid one and not just a manipulative one, we needed to see the volume overcome the moving average. And right now we have a checkbox on that. We are above the moving average. It's looking quite healthy. And today's candle looks like a candle of indecision just because around here there's a lot of pressure to push back the price from the 66. When we were reaching 66,000, you can see how the funding rates were massively negative. That means that there were a lot of shorts opening new positions. And that is the perfect recipe for a short squeeze. We are still in negative funding fees, but not as high as when we went straight into the 66. You can see that it kind of reset around this area. And right now, in the past few hours, it starts to become quite even with the longs as well, which is telling me that it's high likely that at 66, we are going to have some sort of pullback. What we need to focus now is on how big can we allow that pullback to go to remain bullish for continuation to the upside. Just by having a naked view into this candle, I will say we need to hold the golden pocket. That's between 50% and 61% retracement, more or less located from 63,000 to 64,000. That will coincide with this area of resistance there. Hopefully, we can turn that into support and continue to the upside. In the rest of the video, I'm going to show you confluence with that hypothesis. On the 4-hour, we keep building higher highs and higher lows in the momentum, but I'm very keen for the RSI to come back and retest this support located at RSI 55 on the 4-hour. RSI 55-56 is more or less located at 64, so there is a confluence with 64 becoming support. Of course, if we break below this, that will mean that that retracement could get a little bit larger. An interesting note is that so far in the whole bull rally, we've been respecting the phases of the moon. Every time we get the white one here, we do a rally, and when we get the blue one, we get a retracement. But in the past 2 months, we are kind of doing the opposite. With the white one, we are doing the retracement, and then after the blue one, we started pushing up. So we are kind of upside down. Now, going back to the theory of 64 being a healthy pullback, we can see that we have a fair value gap, and the middle of the fair value gap is located at 64. Fair value gaps can be taken partially or fully. So if we went lower and we take halfway through, that will make sense, but we could go all the way to 63 as well. If we go below 60.7, that breaks this structure here, and that will put the longs back into high stress and fear. Although if we hold at 58 for a second time, that could build up a double bottom, which is not necessarily bad either. You can see as well how these levels of liquidity here are holding up the 66,000 as well. In terms of the forecast that I gave 2 days ago for the recipe for continuation to the upside, we nailed the first step, which was right after building this double bottom here within this red triangle of a squeeze. I mentioned that if we break to the upside, we could get to 57, and that will be the perfect recipe to break above this resistance and for continuation to the upside. So now what we need to do is to hold on the daily above 55, ideally, but as a last resort to hold above 50. So 50 to 55 should be on the daily our support for continuation to the upside. But just let me brag for 1 minute because the breakout was beautiful. It retested the red line, and then from there, it went all the way to our target of 57. And if you focus on the reverse RSI, you can see that we literally went straight to 66,000. The alts have a breakout on the 4-hour and are currently also looking for an area for a retest. There has not been any single pullback since the breakout, so that will make a lot of sense. We're going to have to look now into the liquidity to find other ways to confirm that 64 to 63 might be a healthy pullback for the next leg down on the daily. Looking at these fair value gaps from a different source, you can see that we have lots of liquidity from 65 all the way to 63. So that's another confirmation that that area is very attractive right now for the price. There is not much liquidity around here, so if it goes beyond this point, that will mean that it's targeting the 60,000. And that is going to break this structure that looks very bullish. Higher low, higher high, and higher high. If we go to 60,000, then we break that structure. Looking at the liquidity of the past 30 days, you can see that the highest level relative to the area of healthy pullback is located at 64. It could go beyond to 62.7. But then right after that, if it starts targeting all this area here, of course, it completely destroys the breakout. So we have to stick around to the 64 and slightly lower, but not more than that. To the upside, there is less liquidity in the past 30 days compared to the downside right now. And that is quite an expected outcome after seeing the open interest yesterday increasing almost exponentially. You can see here that the delta has climbed to 633, pretty high relative to what we've been seeing in the past weeks. And this is putting the longs right now at higher risk. In the last 3 months, the highest level of liquidity are very far from the price. But right now, you can see that there is larger allocations right next to the price compared to going to the lower end, which looks in a dark blue. So from the point of view of this particular chart, it looks like it's more likely that the price could go and continue going up and punishing the shorts. Since this is a chart of just 30 days, I suspect that there is a lot more liquidity here, as we can see from this other source, and that's because that liquidity was built during the beginning of April. 2 levels that are making me a little bit itchy and nervous about this breakout are these 2 CME gaps that are unfilled. This one is 100% unfilled, and this one here from the 12th of May got partially filled, leaving a small gap at 61,000 left. This one is located at 62,000. So if the price was not to respect the 64, 63,000 and was to go ahead and make a lower low, it could come to these levels. But what does it need to happen for that to still remain bullish? Well, in order to do that, we have a trick. And the trick is that we need the daily candle to maybe potentially take up to 61,000 liquidity, but in the same day, it must close above 63, 64,000. That will leave a wick to the downside, taking that liquidity, but it will still make a higher low in terms of the closing price of the daily. That is a recipe for taking this liquidity from the CME gaps and remain bullish on the daily, which is precisely what we need for continuation to the upside. So do not panic if we go to these levels. Wait and see how we close the day. Let's have a look at the order book, the live data, how things are evolving. I've been very verbose in Twitter just because things in days like yesterday start evolving very quickly. Sentiment can shift, especially after economic news. I hope you appreciate that and it doesn't bother you too much to see I try to stick to the most important and relevant things. If that's not the case, feel free to leave me a comment down below with feedback. I always appreciate the feedback. The lowest level of liquidity that's still remaining and relative substantial, we have a 480 here at 58,000. If we start zooming in, you can see that our next levels of support are located at 63.7, you have 63.5, and on the lower end, you have 63,000. So this is our current protection and is consistent with our narrative that 63, 64 hopefully should hold. By the way, 63 is charged with 1,000. The price doesn't need to get there, but this is telling us that there is a sentiment to protect that level. Careful, because these levels can be pulled out right when the price comes to them. So it's a good idea to keep an eye on Trading Light for this. There are discounts in the description if you are interested in getting access to this service. On the higher end, you can see how there is some level of conviction in shorting 66 to 67,000. We have 500 here and we have 600 there. So combined, you have over 1,000 protecting the price from not going beyond that point. I don't think it's a good idea to be shorting those levels. Shorts tend to get massively punished during a bull run. The interest in Bitcoin has just increased 2 points in the last 2 days. It's incredible that with this move, we went barely from 19 to 21. Imagine what will happen if we make an all-time high. There will be a stampede of late comers buying a new all-time high just to get trapped once again. I'm going to show you 2 alphas that you have never heard before. Number 1, on Lunar Crash, if you focus on the interactions on Bitcoin, you can see that in the past 6 months, this is the lowest we've been. And that for me is a buy signal. The same it goes with the alt rank, which is measuring the performance of the different coins. Every time the alt rank starts looking really ugly for Bitcoin, that's a buy signal. It means that Bitcoin is underperforming and we are in a bull run. So whenever it's underperforming massively, that's another great buy signal. I'll give you a few examples. At 60.7, the alt rank went to 582. And then right after, it climbed the rank all the way to number 3. That's a very typical behavior of many coins. Many meme coins are taking the first places, and then Bitcoin suddenly makes a move back in the top 10. I actually noticed this a while ago, but I decided now to test this approach using bots as well. Thanks to the pair selection connected to my 3 commas bot, I can easily narrow down the coins that have, relative to the rest, very high alt rank and very quickly find those gems that are about to pop. In terms of the alts are still lagging behind what Bitcoin is doing. We are at an altcoin season of index of 43, still being held there just because the Bitcoin dominance right now is pumping big, getting to 56.10. If we close the week like this is just massive. It means that most of the value, most of the funds in crypto are currently going into Bitcoin, which is not great for the altcoins. But don't look away, because right now it's testing one for the 3rd time the support. So this is a make or break scenario. We want the Ethereum BTC pair to hold this level that previously on the weekly was a level of resistance. We want to flip it into support here, and we also want to hold the momentum above this trend line. And that could be finally the point where we actually push for a higher high. For that, the Bitcoin dominance needs to top out, find a level of strong resistance or support, potentially this level of 57 towards the 60. That whole layer there should become really tough for the Bitcoin dominance to continue, and eventually losing this trend line, the white line here, or losing the 54 is going to signal the altcoin season to come back. I found by accident this fractal from 2020 from Ethereum. You can see that the bull run on Ethereum made an initial run that got to this level here. There were 2 levels where we got some significant pullbacks, and the second level of the pullback took us down here to do 3 tests of this level of support. Right now in 2024, we have this pullback here consistent with that local top at the early bull run as well, coinciding with the one in 2020. So I took the liberty of taking this pattern here and copying it in 2024. Let's see if that is also going to happen. Potentially, if this make or break scenario holds here, that could be the beginning of that. Today, in terms of the alts, I'm only gonna cover one of the setups that I mentioned in yesterday's live stream, which came from Solana. I mentioned that we have an inverse head and shoulders with a level of resistance of 156, and that the daily candle was at that point during the live stream breaking out above it. And so far we are 4% above it. The breakout continues and the target is located at $191. You can see that the momentum has also broken out. This is a layer 3 breakout, potentially the last breakout from this momentum. We have one here on the 20th of April, another one on the 3rd of May, and the current one on the 15th of May, which is yesterday. Let me know in the comments if you want me to go back and cover again the alts. Yesterday, I did an extensive cover of all these coins that are here in the list. Many of those scenarios are currently playing out. Guys, I hope you appreciate this video. I will see you in the next one. Take care. Bye-bye.